Okay.
Well, good afternoon, everyone. Welcome to the webinar.
Okay, Jim. Thank you so much for joining
We
us.
have 5 or so on the line. I'm going to have Alex say a few words before we begin.
Unmuted.
Alex, you on the line?
I'm on the line. Thank you so much for setting this up, Jim. And this is a great value add for our clients, we hope. And we look forward to connecting with everyone after the meeting. So welcome to the lunch webinar today. This will be covering 3 important topics at approximately 15 minutes each, which really deserves more time. But we wanted to give you a nice quick overview, and then we can always follow up with any Q&As that you'll have and reserve resources after the meeting. All lines will be muted in listen-only mode. Throughout the webinar, we encourage your comments and questions. Please submit your questions on the right top window pane. There's a lot of material to cover, and we'll be moving at a good pace. So also following the presentation, we'll be sending out a recording of a downloadable link of the presentation. You asked for it, we listened. Next webinar like this will be early fall. So there's about 6 months lull, and this will give you a nice prep of some early information ahead of 2016. We hope this is going to be a great competitive advantage for you as our clients, and will help you with recruitment and retention of great people in our area. The webinar will be presented by Jim Engel of PrimePay, as you know. Jim is a channel sales manager for PrimePay. He has worked at PrimePay for 10 years, and he has 20 years in-depth industry knowledge on topics such as HR, payroll, and benefits. He has given hundreds of seminars and CE credits on these topics. So without further ado, Jim, please take it over.
Okay. Alex, well, just want to double check one thing. You can see my screen, correct?
I can see your screen.
Okay.
Perfect.
So, Alex, I'm going to put you on mute for a second, then I'll bring you back in on the hot topic on the transit
Muted.
and parking benefit.
Perfect.
So, to begin with, the regulations on the 60, 55, or 56, basically employer information reporting. So, for those employers that are on the line now that are under 50 employees, generally you don't have to worry about that unless you're self-funded. For those companies that have 50 or more employees, you will have to worry about this, and there's more information that we can send after the webinar. So the purpose, who's responsible, when does it due, communication, some of these things you're evaluating right now, obviously if applicable. So basically the information reporting that they're looking for is the federal government wants to know who has insurance, be it individual on the employee's requirement side, or for those employers that are over 50, the pay or play portion of the ACA requirements. They want to know if you're offering affordable health insurance, who you're covering, things of that nature. And the only way to do it is certain filing mechanisms that have to go to the IRS. So as you see here, you have verification plus enforcement equals the ACA mandate, which is consistency for the individual and employees. Everyone's required to have health insurance, and the only way for the government to figure out who has it is by employers or insurance companies providing the appropriate information to let them know who is covered by health insurance. So the first section, as you see here, the 6055, that's your individual mandate. So ACA added that every provider of minimum essential coverage will report, file for an individual return, and must furnish statements to individuals. So for those groups or people that have individual health insurance that is fully insured, there has to be certain reports that are filed to the IRS and to individuals in regards to, yes, they have minimum essential coverage. The 6056 portion is for the large employers, the ALEs. And again, they must file information and return on behalf of the employees, and they provide a statement to full-time employees about coverage. So it's similar to a W-2 and a W-3. So now we're sending information to the IRS, either the insurance company under 50 or over 50, the individual employers. So the responsible parties. So you see here, it's broken up in 2 different sections. The ALE are the applicable large employers, and the non-ALEs, which is the non-applicable large employers. So again, if you're not, if no coverage is provided for the applicable large employees, you still have to file the 1094C and the 1095C. So even if you're a large employer and you say, I do not want to offer health insurance, still have to file. Now, if you're under 50, there's no employer reporting. So for fully insured coverage, the 1094C and 1095C, those are the forms that are being filed by the large employers. And if you're under 50, if it's fully insured, the insurance company or the individual health companies are the ones that are doing the filing on the 1094 and 1095B. For self-insured coverage, the employer, be it large or small, both are responsible for doing the filing to the IRS and a return to the employer or the employee in terms of what type of health insurance they have, is it affordable, who's coverage, things of that nature. So any person that provides minimum essential coverage must report the health insurance carrier for insured coverage and the plan sponsor of self-insured coverage. So the 6055 report must be done. So what is an MEC? That's the eligible employer-sponsored coverage, which also includes self-insured coverage or COBRA or retiree coverage, Medicare A or Advantage, Medicaid coverage or CHIP coverage, TRICARE. Those are your minimum essential coverage. So virtually any type of health insurance is reportable. And for the insured plan, the health insurance carrier is responsible for doing the reporting on health coverage on the 6055. And they're doing the forms 1094B and 1095B. So for your small employers under 50, once again, for insured plans, the health insurance coverage carrier, in this case, is handling that situation. Now, for the self-insured plan, the employer or the plan sponsor, they're the ones that are responsible, those employers are the ones that are responsible for the 6055. So New York, generally under 50, you can't have self-insured plans, so not really going to come into play. But if you're in states like Jersey or Connecticut, for instance, yes, you would have to cover that. So ALEs are subject to the employer mandate. Must report applies to all employers that are ALE, regardless of whether the employee is a tax exempt. So everyone is in play. There is no exemption in terms of that. And ALE is defined as 50 or more full-time employers or equivalents determined in the previous year for reporting purposes. So similar to COBRA, whatever the previous year was will determine if you're 50 plus. So your general method of reporting for ALEs, you have your transmittal, and that's the 1094C, and the 1095C acts as the employee statement. So like the W-2, W-3, you're reporting to the insurance company or to the IRS, and you're sending the employee statement for what health insurance they have. And self-insured is similar. And then you have your insured plans. Employer will complete 1094C and one section of 1095C. So for your applicable large employer, 50 plus, you're doing the transmittal forms to the IRS and the information statement to the employee. So we're not going to go through this. It's quite a bit, but I just want to give you a brief look at some of the forms that are out there. Alex can send you out another form that we can give to you that explains the different portions and has the links. But basically, you're entering the filer's name, section 2, the 9-digit EIN number, name and number of the contact person for the insurance company, filer's complete address, where all correspondence are going to be sent, and total number of forms that will be transmitted along with this. So you have the information on who the carrier is, and this is the insurance carrier that's handling this, and how many forms are going to follow, listing all the employees. And this is the 1095B form which talks about the responsible individual, how they're covered, how many months they're covered, things of that nature. So all these information here, small employer health option, what kind of health insurance you have, if you have a shop plan, the identifier number, EIN and address of the employer sponsoring the coverage so they can link the two together, and name and EIN and address of the provider of the coverage, and the covered individual. So the first form, of course, is who the insurance carrier is, and then who the employer and the employees in the scenario. Now, the 1094C, this is coming along as you see here, the large employer member, the ALE. This is a form that you have to be concerned about for those that have over 50 employees. So the name of the employer, so you're identifying who you are. Designated government entity, if that's applicable, line 9 through 17. Total number of forms, so how many 1095Cs are going to be submitted along with the 1094. So you're identifying who you are, and then how many employees or forms are going to follow this one, so that the IRS can track, okay, we have you as a large employer, and now we have the number of forms they're going to be following. Now, lines 19 through 20, total number of 1095C forms to be filed on behalf of the employer. And then this is your aggregate group of all ALEs. So that's something you'd have to talk to counsel, whether you're a controlled group or not. Auto dealers, things of that nature, even though you may have separate EIN, they may be all controlled groups. So the IRS wants to know, okay, how many aggregated ALE groups are there with your company? Line 22, so certificate of eligibility. What type of method are you using? And then the ALE member information. So you have here, column A is the minimum essential coverage. Who the control group is on column B, and what kind of transition relief is there. So if you're in the 50 to 99, you have some transition relief this year. And on the transition relief, so if you are going to be a large employer and you're in the 50 to 99 mark, just remember, you have to offer health insurance to those employees this year on your renewal date. So if you don't renew till, let's say, July of this year, then that's when you have to offer the health insurance coverage. Other ALE means of aggregate ALE groups. If yes on line 21, then list your EIN for all other applicable large employer members. So identifying who you are, identifying if you're a control group, and then on the 1095C, this is the employee provided health insurance. This is where you're going to list the employees that are on plan. Employee's name and social security, ALE member information, and then certain codes on what type of coverage are you offering. In line 15, employee share the lowest monthly self-only MEC premium. So again, looking at whether you're offering affordable health insurance, and then different codes for each employee. And then part 3, covered individual for self-insured side. So again, we're rushing through this, but I wanted you to get somewhat familiar with the type of forms that are out there that are necessary. So the qualifying offer method, this is something that just, we're not going to get into right now. But most importantly, the reporting deadlines. Health insurance coverage must file information returns 1095B and 1094B February 29th, 2016. So the last day of the month of February. This year is a leap year. So that's the last day that you can offer or that you have to file. If you're filing electronically, it's March 31st. And health coverage provider must furnish a statement to the enrolled individuals on or before January 31st, 2016. The statement sent by mail preferred or electronically as long as they're consistent. So the big date to remember is February 29th and January 31st for the covered individuals. So ALE filing, very similar, again, February 29th. And if you have over 250, you must file electronically. And you must furnish, again, that January 31st date for covered individuals. Get the head there. So where will clients get the data? So payroll. So the payroll company that you're working with right now should be providing the demographic information, or your benefit admin portal could be a good source of information, or the carrier, which again is you're under 50. You have certain spreadsheets and filing cabinets, the insurance coverage information. So again, that's your carrier or self-funded TPA if you're over 50. So, payroll is going to be a big piece of this. Also the carrier, and also working with brokers like Alex who would be able to help you get this demographic information. And your benefit admin portal for those that have that system set up. And so your ACA fulfillment requirements, again, the employer and you. So now's the time to start looking at it, putting your pieces together. Again, if you're under 50, fully insured, then the insurance carrier is going to cover that. If you're over 50 and you're an applicable large employer, then those are the ones that you have to start evaluating. So we're going to open up before we get into to Alex's side on the presentation. Any questions in regards to what was just presented before we get into the next section, section 125, or section 132, which is your transit and parking?
Unmuted.
Alex, do you have any questions?
Oh, hey, thanks so much. You could leave me in unmute mode at this point. I think we want to go to the next topics because some of the groups are under 50. And while this is relevant to, we have a lot of clients that are staffing and larger groups, I'd like to get into the parking, and we'll save for the questions for the end on this one.
Okay,
so,
perfect.
So without further ado, thank you so much, Jim. I want to talk about transit. This is something that a lot of people don't know about, that basically a law was passed in October 2014 for New York City employees that are over 20 full-timers. They must offer a transit plan by January 1st, 2016. So this is early information. Hopefully you'll have an advantage over others on how to implement and get this going. But the question really is philosophically, do I really need to do this if I'm under 20? And the answer is maybe you should, because if this is going to be the protocol and you're competing for really great employees, this is a low-lying fruit that doesn't cost a lot for the employer. In fact, it's budget neutral, and we'll show you how. So this is just something you should be doing, even if you're not in the city. If you're in Rockland, Westchester, Connecticut, New Jersey, or across nationally, this is the trend. San Francisco has this already, and Washington. So New York is a third city to follow. Jim, can you go to the next page, please? Thanks. So what is the benefit? The benefit is $250 per month for qualified parking, and mass transit is $130. Legislation is pending. They want to have parity for mass transit as well. If you could go to the next slide, please. So there are different ways of funding this. This is something that you could fund your employees through the payroll, of course. Obviously, PrimePay does this, and you can fund it through a couple of means. Can you go to the next slide, please, Jim? So reimbursement instructions. You could do it by claim form and paper, of course. Next slide, please. It's important to note that the most common way to do this is really using transit checks, or transit credit card rather. The credit card is a great functionality. If you could go to slide number, the debit card on page 35. Yep, or 33 in yours. So basically the debit card or the transit check is what many people are familiar with. It works great. You can fund that amount through there pre-taxed. And you can use also, even if you're overfunding it and it's post-tax dollars, you can still do it through payroll and just have to notify the payroll company. This way everything's sitting on a nice one clean credit card, easy to manage. So for those commuters that are on the LIRR, or there's something called Mail and Ride for Metro North as well as LIRR, that's something that can be used with that function. Next slide, please. Please go to the one after this. Okay.
One thing on the
Yeah, please, Jim.
account balance, if you don't mind.
Yes.
Employees must double check and just see what their account balances are. The money they elect can roll month to month, but the most they can spend down on the transit side, let's say, is $130. So I've had scenarios where someone had $500–600 of unused transit money. They need to monitor, let payroll or the HR side know to stop the deductions, let us know that there will be deductions stopped, and they will spend down their money. So the money does roll month to month, which is a good thing, but the bad thing is you cannot spend more than $130 in any given month. So the employees just need to keep an eye on it.
Right. And also in some instances, you may want to have both. Some employers commute to work, but they still use mass transit to get around the city, let's say. You can fund in both, as I understand it, mass transit as well as parking. So, so this is a benefit that's not just for the employee. The employer benefits as well because you're saving payroll tax. The FICA and FUTA come off that. It's off the top, similar to 401k. And similarly, the employees really save the money. They're saving their share of the payroll tax as well as the ordinary income tax. So someone living in the 5 boroughs, especially the city, state, federal, this is a great savings. So speaking of savings, there's a couple of examples of how that would come out. If you go to the next slide, please. So here we have a situation of somebody on a high end earning $4,000, let's say bi-weekly. So in scenario 1, they're funding $120 just for transit, and scenario 2 is what happens when it's without a commuter benefit. As you can see, the difference over a year, over the course of a year, $620 savings per year. Next slide, please. The other situation is, sorry about the fonts, I actually had that corrected, didn't go through. But basically, you can fund in this situation, let's say someone together with transit and parking funds only $200, and they're on a 35% tax bracket. It comes out to be $70 differential per pay period times 26 is about $18.25 savings for the high-end employee. And again, this is not even maxing out. This is just a $200 situation expense. Next slide, please. So the employer, it comes out to be after the expenses for monitoring this and maintaining this, the filings, the TPA work that PrimePay would do, the employer is still saving actually. So this is not even really costing the employee. It's almost a no-brainer. Employer should be doing it anyway, but with the law, it's going to be a requirement, as you know. But again, why would you want to do this? Because why not? There's no participation requirements. This follows Section 132, not Section 125. So this is just run by high-end earners. Let's say 2 managers want it. The staff do not want this. Likelihood of that is small because they actually could benefit the most of it. But still, you can't have it top-heavy. You could waive out of this. So this is something that, this is something for new employees you should be introducing, especially a value added of working for your company. Second slide, please. And here's another graph showing what happens if it's 20 employees or 40 or 60. As you can see, the savings grow and grow and becomes more significant. But again, even if the employer is not saving anything, this should be budget neutral. After the fees to run this, the employers will not be paying anything, and obviously the employees will love this at work. Okay, And that takes us past this section. Jim, I think this one is really important for our clients. A lot of small businesses do not have an employee handbook. They certainly don't have something called an SPD document, and ERISA requires the SPD. Handbooks are recommended. That's one of the questions they ask if you have one. It's good practice. But the SPD summary plan document, the WRAP documents, is something they should be rigorously doing on a regular basis. And hopefully you can shed some light on this. Thanks. Take it away, please.
Muted.